Your dream home could be closer than you think. If you save the right amount fast, you can put down a real offer in months, not years. This video shares a practical, plain plan you can start today. No gimmicks, just a system you can repeat. You can run this in your real life starting this week. First, define your target. Pick a home price you feel good about and decide how much you'll need for a down payment. Most loans expect around 20%, but programs exist that require less. Write down your number and your deadline so you can measure progress. Estimate a deadline. Set a realistic date that matches your income and savings pace. This creates a hard boundary that keeps you moving. If you miss it, adjust and reset instead of giving up. The savings engine. Open a dedicated account just for the down payment and link it to your payday. Automate a fixed amount to move every month, even if it's small at first. This is the heartbeat of the plan. 2 buckets. Create a fixed savings bucket and a flexible bucket. The fixed bucket gets steady growth, the flexible one catches extra money when it appears. You can use the flexible bucket for windfalls, gifts, or fine-tuned adjustments. Automate and round up. Set automatic transfers on every payday so money leaves your check before you see it. If your bank offers round-up features, turn them on and let small cents add up over time. Small habits compound into real results. Increase income. Look for ways to earn more without burning out. Ask for a raise, take on freelance tasks, or rent out a spare room if you can. Every extra dollar should feed the down payment fund first. Cut costs. Go through every subscription and cancel what you don't actually use. Rename or renegotiate your phone plan and internet bill if you can save a few dollars. Cook at home more and reduce impulse buys, especially on evenings out. Windfalls and surprises, tax refunds, work bonuses, gifts from family. These are not extras, they're fuel for your goal. When they arrive, move the full amount to the down payment fund. Don't spend them on temporary happiness. Debt strategy. If you have high-interest debt, focus on paying it down before pushing savings hard. The interest you pay will steal from your future down payment. If you have low-interest debt and a solid plan, you can keep saving while paying it down. Safe place for money? Keep the funds in a high-yield savings account or a short-term money market. They're designed to preserve your principal while earning a bit more than a basic savings account. Avoid stock market bets for this money unless you're comfortable taking extra risk. Budget structure. Try a sprint version of 50 to 30 to 20, 50% needs, 30% wants, 20% savings. If you can swing it, move towards 60, 20, 20, or 70, 20, 10 as you gain momentum. The important part is that savings gets a real share every month. 3-month plan. Month 1 is about building the engine. Month 2 is about accelerating income and trimming costs. Month 3 is about testing the limits and confirming you can save more than you thought. House hacking and rent. If you own your place or have space, consider renting out a room or an accessory unit. The extra rent can push your monthly savings much higher. Even a small caregiver room can make a difference over a year. Case study. Let's imagine Maria and Omar. They're aiming for a $70,000 down payment in a 12-month window. They cut expenses, added a side gig, and moved $200 from each weekly paycheck into the fund. At the end of the year, they have about $70,000 saved and ready for an offer. Roundup technique. Roundup helps you save without feeling it. If you spend 4.75, the bank rounds to 5 and saves 25 cents. It adds up fast when you do it consistently. Over time, small rounds become a meaningful sum. Progress tracking. Keep a simple dashboard of income, savings, and the target balance. Review it every week and celebrate small wins. If you're falling short, adjust your plan, not your dream. Tools. Use a budgeting app or a basic spreadsheet to track every dollar. Link your accounts so you see the real balance of the fund. Use reminders to stay on schedule. Micro habits. Develop a 5-minute daily money check to stay aware. Do a larger weekly review on a fixed day. These tiny actions fatigue into discipline and momentum. Common traps. Don't assume prices will move in your favor, and don't count on a windfall. Don't invest this money in risky assets for a quick gain. The goal is safety and steady growth. Government programs. Look into first-time buyer programs and down payment assistance in your area. They can reduce what you need upfront and speed up your timeline. Talk to a loan officer to understand what fits. Mindset and momentum. This plan is about momentum, not perfection. Small, consistent steps beat big, occasional pushes. You're building a habit that makes home ownership possible. Like this video if you found it useful. Subscribe for more practical money moves. In the comments, Tell me your target down payment and your buying timeline.